Welcome to the CLiK Trading Education Weekly Market Roundup. It's been a rollercoaster of a week, from record-breaking gold prices to a crypto sell-off that reminded everyone how fast sentiment can change. Let's break down what moved, why it mattered, and what savvy traders should be watching next. Despite midweek volatility and fresh banking concerns, major US indices stayed strong. The S&P 500 gained just over 1%, the Dow up 1.2%, and the Nasdaq led with nearly 1.8%. Even small caps joined in as the Russell 2000 added 1.77%. Investors largely brushed off political uncertainty, focusing instead on softer inflation data and a potential Federal Reserve pivot. Three factors powered the equity rally. First, a Federal Reserve pivot. Dovish tones from policymakers boosted confidence. Second, banking concerns contained, with regional jitters viewed as isolated. And third, political noise ignored, as markets looked past the US shutdown headlines. Meanwhile, the FTSE 100 slipped slightly, down 0.27%, dragged lower by oil and bank weakness. The big winner this week was gold, surging nearly 5% to new record highs above 4,300 before easing slightly. Silver followed with a 3.3% rise, while crude oil slipped over 3% as oversupply worries returned. Emerging market demand, particularly from India, continued to support the gold rally, with the Reserve Bank of India's holdings now topping $100 billion. Three drivers stood out for metals: safe haven flows from geopolitical tensions, lower rate expectations making non-yielding assets more appealing, and ongoing supply constraints, especially for silver, where industrial demand remains strong. Oil, on the other hand, logged a third consecutive weekly decline. The dollar softened this week, down 0.21%, as traders increased bets on an October rate cut. The euro and pound edged higher, while the yen strengthened on lower treasury yields. Currency traders now await the Fed's next move, which could set the tone for global FX markets heading into November. Digital assets took a hit across the board. Bitcoin dropped nearly 8%, Ethereum fell 6.7%, and XRP lost over 10%. After September's optimism, this was a sharp reminder that crypto remains highly sensitive to macro shifts and liquidity cycles. So why the sudden chill? Three main reasons: a flight to stablecoins as traders reduced risk, profit taking after a strong September rally, and renewed regulatory worries out of the US. The long-term believers remain, but short-term momentum clearly shifted to caution. Under the surface, the stories mattered. Regional US banks reignited concern with rising loan losses, while the Fed's softer tone reinforced hopes of rate cuts. A US government shutdown delayed key data releases, and trade tensions briefly resurfaced before calming later in the week. After reaching all-time highs, gold and silver faced a Friday pullback. It wasn't panic, just profit-taking and a brief sentiment shift. Trade optimism reduced safe haven demand, and a slightly stronger dollar took the edge off. For traders, it was more of a breather than a breakdown. The fundamentals remain solid. Central banks keep buying, rate cut expectations support gold, and silver's industrial story, especially in renewable energy, remains powerful. Supply constraints continue to tighten the market, suggesting the broader trend is still intact despite the short-term dip. Looking ahead, in four key areas to watch: FOMC commentary, any rate cut confirmation could drive volatility; earnings season, especially US banks and credit conditions; oil inventories and OPEC; and finally, crypto sentiment, watching if buyers return at support levels. With the US shutdown limiting official data, every release carries weight. Traders will monitor inflation metrics like CPI and PCE, labor market data for signs of weakness, and consumer spending, the ultimate test of economic resilience. Let's finish with key levels to watch. Gold, 4,150 support and 4,300 resistance. Silver, 50 psychological level. For equities, the S&P 500 now sees support at 6,700, while Nasdaq eyes 25,000. In crypto, Bitcoin at 105,000 and Ethereum near 3,800 are make or break levels. Holding these zones could prevent deeper corrections. The banking sector stayed under the microscope. Loan loss provisions are rising, commercial real estate exposure remains a concern, and deposit flight worries have resurfaced. For traders, upcoming bank earnings will offer crucial insights into credit quality and liquidity conditions, key signals for broader market stability. Step back and we see four big themes converging: monetary policy pivot, credit cycle concerns, asset class rotation, and geopolitical fluidity. Together, these forces are reshaping market dynamics heading into year-end. Record highs feel great. But Friday's pullback was a timely reminder. Even strong trends pause. This week underscored a timeless lesson. Risk management beats prediction. The edge isn't in calling every move. It's in executing your plan with consistency and discipline. Markets never sleep, and neither should your education. At CLiK Trading Education, we are here to help you stay informed, confident, and ahead of the curve. Review your plan, identify key levels, and maintain discipline in your trades. Stay sharp and trade the right way.